So like the returns have been quite sizable. When we actually show our returns, right, it starts to get a bit, how do you put it? People might think that it's not real.
Hi friends! Welcome to the Weeblinks podcast. So today we have with us our friend Justin. He is a specialist, expert in precious metals.
I like to think so. So maybe let me introduce myself. I actually am the director and logistic and operations manager for Auctus Metal Portfolios. Basically, my whole life, I've been working in precious metals. Day one, I was working on the logistics side of things. I saw how physical precious metals will move. After that, about 5 years later, I moved to a refinery. So I saw the start, how it's actually minted, made into bar, transported over the world, stuff like that. Then now I'm in the portfolio management, which is also precious metals. So I covered all sides already.
Wow, that's great. You can see everything and you know how all the different pieces move.
Yeah.
So we are quite a special company because before we actually set this up, we did our research and no one has actually done this like anywhere in the world. We apply modern portfolio analysis to precious metal specifically. When you talk about precious metals in general, you only think of two things, gold and silver.
Yes.
Correct?
Yeah.
And what do you normally do? Let's say if you're buying a sizable amount, you'll try to buy it, put it in a vault, stick it somewhere and let it collect dust. That's not what we do. We apply modern portfolio analysis to it. So across 5 different metals, so it's gold, silver, platinum, palladium, and rhodium. We have a bespoke algorithm that we redesigned. It helps to dictate at every single point what mix of precious metals you should have across these 5 metals. So diversification, of course, is key, and we split it around these 5 metals. And as time goes by, the algorithm actually picks up pricing anomalies across all the metals, and then it'll tell us whether a trade trigger event actually happened. So basically, you sell down on a particular metal and you buy another. At no point we actually go back to fiat currency. It will always be a metal portfolio. Yes.
There's a full metal portfolio.
Yes, exactly. So it's pretty interesting because we have back-tested our algorithm all the way back to 1970s, I believe. Exactly. So like the returns have been quite sizable, but I know when we actually show our returns, right, it starts to get a bit, how do you put it? People might think that it's not real. Basically, because this is what we do. We actually start rebalancing, and our performance actually strips out all premiums and storage management fees, costs, and everything excluded already. So if you must know, because we deal in these 5 metals, right, we have to do in physical metals. We're talking about bars and coins you can actually hold in our hand. Why we can't do it in ETFs or derivatives or any like futures contracts, things like that, is because metals like the rhodium, for example, I took out, there's no futures market. You can't trade that on futures market. You can't.
I didn't know that.
You can't future. You can't. There are ETFs. There are ETFs that you can buy rhodium, but it doesn't track rhodium that well, I would say. Then of course, because rhodium, some of the metals are actually industrial metals. So it falls down to supply and demand.
So like platinum, is that like one of the industrial metals?
Yes, platinum, yes. Although it's deemed all these 5 are deemed precious metals, right? People actually use the word interchangeably, like precious metals and monetary metals. I actually classify gold and silver more towards the monetary metals. Platinum is more towards the industrial. It's more affected by the industrial side because the investment side is just really small.
Can you explain what is the difference between industrial and monetary metals?
Monetary metals like gold and silver has been known for like generations, decades, millenniums. Like basically, you look at it as a form of money. So like even let's say it goes back to like in today's day and age, like Olympics. What do you strive for? Gold. Exactly. Silver. You always strive. Exactly. Why?
Because I at least get bronze. Sarah can't get any of them.
Oh.
I'm the one putting it.
That's a job anyway. Yeah, but people actually strive for gold and silver, and it's a monetary metal after all. That people look at it as for years and have seen it as money. So in a good economy, when people like, for example, now the fiat currency, right? When the economy is good, people tend to start to forget about this metal because there's no use for it. Yeah, you have other forms of currency. Only when things go to when things hit the fan, hit the fan, basically. Yeah, it's a fan. Then people will start to look back at all these monetary assets, like tangible assets, and yeah, that actually links to the point where people look at, like, there are a lot of arguments. People say that gold and silver, it's a inflation hedge, for example. Yeah, I don't believe that one bit. It's look at inflation has been soaring for the last year or so.
Yeah.
What has metals done? It went down. Yeah, it's a crisis hedge. Like I said, when things get bad, people actually look towards gold and silver as a form of money. And the other side of the coin, I'll just focus on platinum for now because the other two actually has already revalued. I'll share more about it later. Yeah, but platinum, it's an industrial metal because it's used more towards the automotive industry as a catalytic converter. And right now, there's more. Of course, there's more uses to it. And one of the biggest uses is actually towards the hydrogen fuel economy. So I know a lot of people talk about electric vehicles and how it's very green, but for the audience out there, let's take a step back and just look at how this electricity is being generated. It's not green whatsoever. That's what I see. That's not only me, the other analysts actually look at it that way as well. So platinum, on the other hand, used in hydrogen fuel, it's actually much greener compared to everything. I actually won't go into details, but basically there is quite a number of usages for platinum, and that's just one side. But I look at more of the supply and demand deficits that the reports are actually showing, and it's quite alarming to say the least.
When you look at the supply and demand, why do you think there's going to be a mismatch in the future?
Okay, but this chart was actually released by the US Department of Energy. The purple line is the current supply. Okay, the whatever is here is the demand. You see this little blip where we went underneath the supply went underneath the demand. Which means there's a deficit, right? Yes, platinum went from I think $800 to $1,300. It's just sliver. And right now it went back up. It went back up a little bit, but in terms of the current deficit, it's growing immensely. And if you must know more about platinum, right? Platinum is actually like I said, industrial metal that is mainly comes out of, the majority comes out of South Africa. So there is a energy crisis that's happening in South Africa, mainly the energy supplier called Eskom. So it's like the SP group of South Africa. Basically, their infrastructure, it's gone to the drain. It's basically gone to the drain already. So how bad is it, right? Let me put it this way. I'll put it in Singapore local context. So let's give an example that you live in Pasir Ris. Okay, the government suddenly tell you tomorrow between 12 p.m. to 6 p.m. Whole Pasir Ris, no energy. No electricity.
Wow. Okay.
Deal with
That's
it.
not very good.
Deal with it. So that's exactly what's happening in Africa right now.
They're not
South
going to have
Africa right
enough
now.
energy to continue.
They can't. So this is basically what they call load shedding. They cannot have the whole country going with electricity pumping all the time because the infrastructure is just so bad. So they actually have to load shed certain areas for long periods of time so that the whole infrastructure doesn't blow up. It's that bad already.
So just on the chart that you showed us,
Yeah.
the purple line doesn't seem to be increasing with demand, and you think that it's because of what's happening in South Africa that is going to trigger that flat.
This is the purple flat line, right? It's not really factoring what's happening in Africa. So it can actually go down.
It can go much lower.
It can go much lower, yes.
Okay.
Yeah, so that's actually a bad situation. So I don't think that every research that our team actually does, and we've done really a lot of extensive research, we actually have a man on the ground in South Africa as well.
Oh wow!
Who-
Okay,
yeah.
so in South
Yeah,
Africa,
so he's the one who actually put out this chart for us because he was the one who got the data and he put it in graphics to show how bad is it.
Wow,
Yeah, and his experience is he has like I think 30 years of experience in the PGM side, which is platinum group metals, the PGM side of things in South Africa, in the mining side, and he's been basically screaming on the top of a hill, telling us how bad the supply and demand picture is. And then that's when a lot of our clients, a lot of people who have been asking us, like, you talk so much about platinum or silver, for example, like it's in deficit and everything, and how come the prices are going down? Yeah, so that links me to my story, to the metal called rhodium. Okay, the only difference, not say only, but one of the main difference between these two metals, rhodium doesn't have a futures market, platinum does. And with the futures market, platinum prices are now going up. Rhodium, no futures market, supply and demand just take hold of everything. And the price went to the moon. So example of rhodium. So our company actually have been trying to we got our clients into rhodium in 2016, 2017, 2018, when rhodium was trading below $1,000 all the way to about $2,000 an ounce. So
It's
that's
double.
yeah. So rhodium is actually a metal that's much more rarer than gold. So it might as well, and it's very hard. I'm not sure. You're
What's
probably
rhodium used for?
actually rhodium again used in the automotive industry for catalytic converters. Actually jewelries as well. So they actually spray rhodium on your rings, so that it doesn't scratch easily, because rhodium is just very hard.
Oh.
They didn't know that.
Yeah, and it's very no, it doesn't stain. Yeah, like they probably add a color later lah. In terms of the process, honestly, I'm not too sure, but I know that they do spray it on rings. I was getting our clients in that levels, and most of our clients never heard of it, and they only know about rhodium as an element in the periodic table.
Even I didn't know about rhodium in the periodic
Before
table.
we started
You know
this
rhodium
session.
on This is why he's gonna get bronze. Okay, bronze.
Oh, man.
Yeah. So it is a pretty rare metal, but basically when we were getting our clients in, most of them didn't know about it. And they were like, okay, you tell us so much about gold and how gold is going to revalue, is a bull market and everything. Why do you get us in rhodium? So we told our clients, all I care about is outperformance. I believe that gold is going to go higher, but if gold is going to double, I would rather buy, let's say, silver. Silver might go 5 times. And if 3 to 4 times. And if I were to want to get silver, maybe I'll get platinum. Platinum will go 4 or 5 times. We are looking at outperformance. So between that period, and gold did move a little bit from 2016, if I'm not mistaken, it went up from $1,000 to probably $1,008 or $2,000. So rhodium kind of flatlined a little bit. So our customers were still a little bit angry, but we told them that the supply and demand picture doesn't change. It really doesn't change. So we look at it and we don't believe our research is wrong. So I think in 2019 to 2020, if I'm not mistaken, rhodium basically went all the way to $30,000 an ounce.
And you mentioned just now it was what, $1,000?
Below. So like most of our clients got it below 2,000. Some got it below 1,000.
Nice.
And of course we didn't catch the top. Like we had price predictions where we think we're gonna go. So the conservative approach was it was going to go to $8,000 an ounce. The realistic approach, we think that it was going to go to $12,000 an ounce. The optimistic, we think is going to go $18,000 an ounce.
So it went
We were wrong. We went to $30,000. It went to $30,000. So yeah, it went all the way up,
so
and
you just kept selling.
we kept selling all the way up. So I think the last trade we got our clients fully out of it was somewhere around 22. So it wasn't, maybe not close to 30, but look at where they bought it.
10.
Yeah,
Yeah, it's 10x. It's 10x. And
Who needs crypto now? We got precious metals.
But the time frame that we look at for precious metals is significantly different from other asset classes, right?
yes, precious metals tend to be a little bit more of a longer term investment because it's a crisis hedge. You don't necessarily want a crisis every day. If you want it, then the world is not a very nice place to live in, right? So you want to, it's a hedge against something, a systemic fail in the system or something. So that's when it starts to rise. And we believe that in a free market, like if there are no futures market or whatever for precious metals, right, it should be much higher, much higher. It's kind of disconnected. We're seeing backwardation in prices, which is something wrong in futures market. Because for viewers, right, backwardation is basically the futures market prices being cheaper than the current price. Then something's wrong. But it should always be more expensive because you should factor in logistic storage costs, things like premiums like that. So that it should always be higher. So there are times when it falls lower, but it shouldn't be at this like below for far too long. So like I think a good 3 months back in July all the way to September, I was monitoring the prices quite actively, and silver was in backwardation for literally 3 months.
Oh wow!
Which is something wrong. Yeah. So, but anyway, that's the futures market for you.
What do you think about precious metal ETFs compared to physical bars? What are the benefits of either, and why do you decide to invest in physical bars?
So, ETFs are a great way of getting exposure to precious metal for sure. But in our industry, right, there's actually a very old saying that if you don't hold it, you don't own it. So
like crypto?
Not your key, not your coin.
Exactly. It's when, okay, so even I know there's always this argument between the precious metal side and the crypto side, right?
Yeah.
But we have the same enemy.
Yeah.
Right? Which is
yeah, that's true.
we have the same. We might not look at things the same way, but we have the same enemy. So similarly, if you don't hold it, you don't own it. Removes all this risk, all this counterparty risk. If you have a silver bar or a gold bar, held at home. They want to do in the derivatives market or whatever, right? But it doesn't change the fact that you still hold it.
I guess that makes a lot of sense as well. I mean,
Yeah.
recently FTX also blew up, right? So people thought that they were holding certain coins,
Yeah.
but they didn't hold the keys.
Yeah.
Right. So I guess buying an ETF is something like that as well.
Yes, because there is a force majeure clause in all these ETFs. Not saying that they'll run away with your shares or whatever, but likely if the prices start to move upwards too violently, right? And if the ETF doesn't have the precious metal actually back, like they didn't buy the precious metals, so they because there are some ETFs out there that in their white paper they do state that if the prices are too volatile, they actually wait for it to come down before they'll buy it. So essentially there is this exposure.
Yeah, which means there's like a chance for like a bank run as well, right?
Exactly.
Because it'll be like fractional reserve.
Correct.
Because they don't have it back 1-to-1 exactly.
Correct. But most of these ETFs, right, they won't allow a conversion until you hit a X amount of metals, like or the shares, like conversion unit basically. And those levels are something that retailers will probably be never very hard to hit. But ETFs in general, they have that force majeure clause. So what they do is if the price start to go very violently, they'll probably just settle for cash.
Right.
So you suddenly just lose your exposure. Imagine like, let's give an example. If silver goes ballistic, for example, if now it's trading at what, $20 plus, whatever. If it suddenly tomorrow you see it go to 50, day after you see it go to 100, just short squeeze or something. Yeah, they might probably just, I settle it for you at $50. But you missed that $50 to $100 range. They settle it for cash.
And they can choose at what price they settle.
They'll probably choose the price that it's within the day, within the what it's trading at, so it's within the scope. But that
So they'll just close you out their position.
yeah,
Basically.
yeah. So it might not happen. They might honor the trade, to be example. But I think that's a risk that at the end of the day, if you're trying to get away from fiat currency, I think that's the right thing to do. Get away and actually get tangible physical bars and coins where you can hold. And not necessarily that you have to bring it home. You can actually store it in the vault, like honestly, like most Singaporeans do. There's a lot of Singaporeans who actually do that. Because they don't want to. If it's out of my hands, it's also out of the government's hands. Something if you put it in a vault, a third-party vault, not within the banking system. That's the whole concept.
So ETFs are basically for people who just want to go in for maybe like short-term
In a way, they're
speculative trades.
correct. You can play the swings, but yeah, I'll agree with you. It kind of defeats.
trade,
Yeah,
it's not
it's just a
investment.
trade. It's not an investment. Yes, agreed.
So what I'm getting is that precious metals, if you're investing in them, it's less of like a wealth generation machine, but more of like a
Wealth preservation.
Yeah.
Correct. But at this current stage of the economical picture, I would say that precious metal is the way for you to actually gain wealth. Not just preserve your wealth, but at the same time gain your wealth. Because let's face it, like the equity market is basically there's a long way down to go. Where I don't think we're at the end of the game, so it's gonna go down a little bit more. Crypto, I don't monitor that market as actively, so I honestly can't comment much. And honestly, I think most of your fans, I don't want to piss anyone off, crypto, but I don't monitor it enough, to be honest, to give a comment about where crypto is gonna go.
But how do you think crypto can fit into the commodity space?
Okay, so many of people actually have approached us as in our companies already, as they are trying to come up with some a crypto coin that is backed by physical gold, like silver. So this allows them to
Going back in time, basically.
yeah, but I think at the end of the day, if you look at it, there are some people who have already done it. So this is not new. This is not a new idea. I actually know some people who did it back, I think 2017 or 2016. When crypto wasn't really booming yet. But I know that seems like a pretty decent idea, but where does crypto add value to it? So like I literally had someone came into my office who told me he had this idea, they want a crypto coin, and like he just every time people buy units of it, he'll just buy the physical part to back it. I told him like take out the crypto part, where does it add value? Like crypto must add value to this.
Isn't it more of like ease of using the currency? Because if you're using fiat or cash,
Correct.
So like moving money around, paying people overseas, that's the part where it's frustrating and expensive.
But
intermediaries.
But that might mean that you need to risk your assets onto an exchange. Like if you want to transfer, let's say because there are companies that have already done this. So if I buy a crypto coin that is backed by silver, like let's say 1 unit is 1 ounce of silver, for example. If you're talking about the ease of it, like how am I going to spend it? I don't know how. I don't know how am I going to spend it because it's still on their platform, which I don't get a cut or anything like that I can spend. But if I want to spend it, I probably need to transfer it to somebody else who offers that function where I can maybe put it in a Visa card or MasterCard that I can spend.
Yeah.
That put
mean,
the risk there already.
I guess right now there wouldn't really be a quick way to spend it. Technology is kind of not there. But in my head, I feel like at least sending money to people, you can send the crypto coin and they
Fair
can
enough.
change it to fiat currency and spend it on them
Yeah.
on their own. But right now, for example, B2B company transferring money to another company, we're transferring like $100,000.
Right.
It's so expensive to do it through a bank. So I guess this is one way that crypto helps in my head. And at least it's safer because it's backed by gold and not an algorithm.
But I guess it also enables gold to then be traded on the crypto ecosystem. So I guess it could be more or less it functions like an ETF-ish.
In a way,
where
yes.
like it's like a paper that then is backed by gold, whereas this is a coin that is backed by gold.
Yep.
So within the ecosystem itself, let's say someone holds like $200,000 worth of
Right.
crypto, but they decide that maybe crypto right now isn't too safe. Maybe
Yeah.
Bitcoin's not going to do well, and
Yeah.
they believe that gold is going
It's
to
gonna do
do well
well.
in the future. What they would have to do is to take the money out, get it into the bank accounts before they can then spend it on gold. But if you have a crypto that is fully backed by gold, then they can just buy that to get the exposure to the price.
In a way, yeah. So in that way, in that sense, yeah, it will be quite similar to an ETF. But if they don't have that force majeure clause, then I think all is good. All,
I
basically
mean, I guess
all is
there's
good.
still counterparty risk.
Yeah,
Yeah,
that's
that
still
just
counterparty
introduces counterparty
Yeah.
risk. So it's
Yeah.
probably not. If you're looking at it as a way to complement like the physical gold, probably not.
Correct. So it's not like, even though I'm saying this where like there are ETFs, there are counterparty risks, but at the end of the day, when you're trying to get exposure to gold, the short-term side of things, short to mid-term, it might be slightly cheaper because you don't have to pay premiums on physical. So personally, I have everywhere. I buy the ETFs I trade futures, I trade the spot market, I trade the ETFs, I buy options as well. I also buy that crypto coin that I mentioned. That is backed by physical. I do everything because
you
I
also-
diversify. When the thing is, I want to know where's the value of it in all of this. So the only value at the moment I'm seeing at that exchange, right, is it's easy for me to buy and sell gold when I see volatility spikes, maybe off hours of Singapore, like maybe in the US side, right? Then I want to get out of it. It's easy because if I'm holding a physical in Singapore, then I see gold suddenly spike 2 times and I want to get out. I can't, right? So that's like the buy and sell side. Definitely, there's a good good element to that, but the companies that I work with, they have thought of that solution as well, which I know you guys know of, the poop metals. That is it. Of course we're gonna launch the buy and sell function soon, but basically you'll be able to buy and sell at any given time, and there is still premiums on it, but there's no counterparty risk. That's the thing. There's no counterparty risk.
Yeah. I think the main issue is the crypto just adds a layer of counterparty risk
Yes.
in exchange for lower premium.
Yes.
But again, it depends on whether people think that
Is it
premium
risk? Is it
Yeah.
worth the
Yeah.
risk? Yes.
I think it will attract people, really younger people who are already in the crypto market,
Yes.
for them to kind of get exposed to precious metals.
Correct.
And then maybe when they get older or when they educate themselves more, they can actually buy the physical
Yeah.
one. But
The-
at least it's like a bridge.
I think one of the big reasons is the younger generation, those people are trading in crypto, right? I don't think they've seen what can happen to the world. Like
They are seeing it now.
yeah, they are seeing it now. That's one. But like in terms of like in the past, US have actually confiscated gold, physical gold from the people. So and because of that confiscation, we know that there are people who are born in that era, know that it's possible for it to happen. Even though personally in today's terms, right, I think it will never happen again because now gold is a global asset. You can't just confiscate in one country anymore.
Yeah.
But anyway, they believe that it has happened before. So they believe that it can happen again. So they've seen it. Obviously, they'll fear it. But the younger generation, maybe they haven't seen it. So right now, they're seeing it in the crypto market, FTX and everything. Everything is possible.
I've seen that argument used by crypto people about why Bitcoin.
Should put in a ledger and just store
Yeah.
away, right?
Oh no, more of why you should invest in crypto and not precious metals, not gold, because
Oh, right.
it is confiscatable
Right.
versus like if your money is on the blockchain,
Right.
you know, it can't be confiscated by anyone except if you're an idiot and lose your keys.
Yeah. Oh,
So I mean, this is your fault, right? There's no one else to
exactly.
blame.
Yeah, exactly.
Yeah. So when it comes to Bitcoin, do you see Bitcoin as the digital gold?
Okay, let me put it out there for the people who follow the Weeblings, right? I do have a small holding in Bitcoin, okay? But truth be told, I do not consider it to be digital gold whatsoever. Bitcoin is a great way to speculate. It's a great way, I wouldn't even go to an extent of investment. It's a great trade. Whoever got in Bitcoin in 2016, 2013, okay, and managed to sell it at what, 50, 60K, you guys are smart, okay? You guys are smart. You've made a killing, but it's not digital gold. It can never be digital gold because it's so easy to actually screw the people. I'm not saying that those people holding in a wallet, they can never get it from you. The government, if they want to actually screw Bitcoin, how are they going to do it? How are they going to screw the crypto market?
Regulation?
So that's one. Taxation, regulation. They can close down the exchanges, things like that. So okay, the exchanges obviously maybe not the government's doing it. They imploded on themselves. But when exchanges cease to exist, it won't really be possible to trade Bitcoin.
Just make it as difficult as possible.
Exactly, make it as difficult as possible. And if the government, because everyone knows about CBDC, right? So if the government is going to be launching a central bank digital currency, you can be damn sure that they won't have a competing currency. No way they can have that. So what are they going to do? They're going to, firstly, one thing is some of our clients are saying that they're surprised that the government has actually let it run for so long, like Bitcoin or the other cryptos run so long. But look at it, infrastructure. How do you build infrastructure? Is the government side or the private side better? Private side is better at building infrastructure. So that's their plan. They let the private side actually build up the infrastructure. Second, build up the hype. Right? So everybody knows about digital currency. Everybody knows about Bitcoin. Everybody got into it already. So they popularize it for them.
Yeah.
And once this is done, and they can start if they actually do launch the CBDC, I'm pretty sure they know what to do to actually crush the other side of the coin, the other side of the trade the other side of the fence So one, they can propose taxation. Let's say they tell anyone who's holding Bitcoin, if you sell it by the end of the year, you won't get tax. If you sell it after the end of the year, you'll get a 90% tax. For example, I don't know how much they can put whatever amount.
Yes.
That would tank the price very, very, very hard, right? Yeah. Second is they can start closing the exchanges for whatever reasons or liquidity or whatever, make it as hard for you to trade. So that becomes another issue. Just this two. I think this two is enough for people to actually start to push away from Bitcoin. But my take, why I still have a small holding in Bitcoin, because it doesn't care what I think. Okay, my opinion doesn't matter. Okay, this is just my opinion. What's going to happen? But precious metal, and people might not be too sure about this, but precious metal market, the physical side of things, is very small. The precious metal market is very, very small. It can't accommodate the people from the equities market, the bond market especially. Okay, you can't. There's not enough space. There's not enough metals around to go. So when that happens, right, when capital flows start to come in, when capex, basically all the investments start to come in, right, into precious metals, the commodities complex, I would say, will start to come in. You'll start to flow into physical metals, ETFs. They'll use the miners in equities as a proxy to get exposure into metals. Even with all this, not enough. I still think it's not enough pieces of the pie to go around to share. So where's the money going to go? I believe it's going to go to Bitcoin. It will overflow there, and there is a very big possibility that it drives it to 100K.
It will overflow to Bitcoin because of the narrative.
Yes. Yeah, like I said, it doesn't matter what I think.
Yeah.
It matters what everyone thinks.
No.
Yeah. So so that's what my take and that's why I have a small allocation in Bitcoin. Not enough to make a killing, but enough for me to sleep soundly at night if it goes to zero.
Well, your personal portfolio revolves mainly around precious metals, because even with ETFs and like Bitcoin, it's all with regards, because they're all linked to precious metals in your head.
I would say that my my investment portfolio consists of not just precious metals. Of course, a big chunk of it is, because that's the most I do the most research on, which I'm sure of. But in general, I think commodities are going to go up. The whole commodity complex. So I have exposure to uranium, okay, precious metals overall, of course, food producers, water, energy, oil. I think that all of them are going to do well. I think that's why I'm going to them. But
You get exposure through ETFs.
some of them I have to. Like uranium is a bit hard, physical. So, so I don't have to get
You're quite
yeah,
scared.
It's a
It's
bit scary.
uranium
Yeah,
lying around.
exactly.
Might be
So
arrested.
yeah, so I do buy it through ETFs, and sometimes through miners. I'll say the high value place will probably be some miners I buy in either long dated options or I buy shares. But of course, miners you have to be exactly right, because there are certain periods like I've seen it in 2008 to 2012 when silver went to $50. I bought some silver miners. Some did well, some remained flat, some went down. Even when silver was going up. And so because
So easy.
again, miners, right, they are like you can have the best management in the world.
Yeah.
You dig into the mines, right, and suddenly you don't find
Yeah.
yeah. So it's you have to get it right. So it's really a bet. So that's why it's safer sometimes to play the physical side of things.
Or just ETFs.
Or ETFs if you're willing to take the exposure. If you're willing to even if let's say if it goes to 50, they settle it for cash, I'm good with that. Go ahead.
So what's your largest holdings now?
Okay, my portfolio consists of two. My physical portfolio consists of two of the largest metal, which is platinum and silver.
So why platinum and why silver?
Okay, both silver and platinum are severely undervalued. Severely undervalued, in my opinion. Both of them have great stories to them. Okay, silver it's much more volatile. Silver is a higher beta gold, so silver tracks gold. When gold goes up, silver goes up faster. When gold goes down, silver goes down way faster. So if you've seen the silver chart, it's very ugly. At the moment, it's very ugly. Yeah, but there are many factors to why silver is a good trade. But let's just focus on the supply and demand side. Demand has been just gangbusters. Ever since 2021 February, right after the GameStop stuff, there are quite a lot of people who ventured into the silver side of things. So they started exploring silver and they realized how severely undervalued silver is. Then these people started buying non-stop silver. They just went crazy. Whatever price it was going up and down, they just buy weekly basis. It became a weekly thing. And of course, on forums like Reddit and stuff, you start to see them. They start to post their stack, if you call it, right? It's like retailers shouldn't, but like it's amazing to see retailers to have that much of silver, like specifically silver, for example. And it's quite a large stack, and I think they are going to do very well. But unfortunately for them, at the moment, prices have not really gone anywhere. Actually, it's been going down. But for all those people out there, don't lose hope. I know I myself have a large holding in silver, and I still think that it's a good trade, and we are going to go just severely undervalued, supply and demand side of things. And let's also talk about there's this variable, what we call all-in sustaining cost, short for AISC.
Okay.
So it's basically the cost for a miner to actually mine up silver, like wages, energy costs, everything, right? To actually get the silver out of the ground. Okay. So when at this price, right, is basically when what silver is trading at, that is their break even. So the all-in sustaining cost at the moment it differs from different mines, but on average it's about $18 to $19. So silver is somewhere trading about $20 plus US. I'm talking about USD. So we have traded below that for quite some time.
That means they are losing money. Are the miners losing money?
Exactly. When it was trading below, they were losing money. So now they're trading slightly above, they're making a little bit of money. But you also have to factor in if they have had, the all-in sustaining cost already factors in the hedging and everything. But when it becomes you make such a small sliver of margin for a big business, a mining business like this, what do you think will happen? People are like, call it quits. No, it's not worth it anymore, right?
Yeah.
So if one mine just closed down, because the business is not worth it, right? Supply suddenly just shrinks. Right? That's how supply and demand always catches up for intangible assets. The price will always catch up. Yeah.
So that's for silver.
Silver, correct.
And
So
that's the metal is that your favorite metal?
love-hate relationship. I trade very actively on the spot futures market for precious metals and also on the physical side. So my physical holdings are long-term picture. So when I get excess cash, I try to time the market, enter, and just leave it there. I don't care already. For the spot futures market, I trade the ups, I trade the downs. So because I live, eat, and breathe precious metals so much, and in a way, I'm really obsessed with precious metals, and I study it so much that I kind of, not say can predict, but patterns start to form quite actively all the time in the precious metal market. And I trade the ups and downs and make this extra cash, put it into physical. That's what I do, put it into physical.
What kind of pattern are you seeing right now?
Okay, let's talk about I'm going to focus a bit more on platinum, which also translates to silver because they do trade along with it. But we had an article that was put out, I think, just late last week.
We'll link to it.
Yeah, so this article basically talks about a seasonal pricing in precious metals and particularly platinum. So platinum, like I said, is an industrial. So the players in the market are the wholesalers, the refineries, the mints. So these are the people who are the biggest players in this precious metal market.
Yeah.
So what they do is they work on a calendar year, January to December. Closing in on December, November period, you'll see they'll start to destock their goods. They'll start to sell down their inventory. Why? Because they're going into end of year audit, either physical audit, financial audit, close the books, done. I don't want to care. So like as little inventory as I have. Okay, this works in basically every other business. If you are going to do a physical audit, sell as much as you can, right?
Yep.
Closing sale, everything, right? So this is what they do, and they stop buying. So this actually drives the precious metal, like platinum prices down in the last 2 weeks of November.
Interesting. I guess that's about now.
Yeah, exactly. That's about now. So it sometimes goes all the way to mid-December. So it's about a month of selling. So this is where we see weakness in prices. But come 15th of December, remember the date, guys. 15th of December.
15th December.
Okay. This is a time when seasonal prices get into action. Basically, selling is done. Okay. When selling is done, there's only one direction to go, up. So you start to, of course, don't over leverage. If you want, you can buy a bit of contracts in the spot market. Just don't over leverage. Set your stops a bit wider, but you can start buying already in 15th December because when we took seasonal data back 25 years. So every year for the last 25 years, if you buy in mid-December, between the 15th to 20th December, coincidentally 20th December, my birthday.
Wow.
Okay, so it's a gift for me, birthday present for me. So you buy during that period and sell it into late February to 20th February. So you basically, if you buy it from mid-December to 20th February, okay, there is out of the 25 years, you have had 23 years of winning trades.
That's incredible.
23 years. And the average return, right, is 11.65% for a 2-month period. 2 months.
What about the worst loss?
The worst loss, 0.83%. So the 2 years that you lost, you're probably, the average loss is 0.78%, but the worst loss you had 0.83%, which is basically close to flat.
Like nothing is going flat.
Yeah, and remember that this data, 25 years, it factors in the bear market in precious metal as well. We have been in a bear market after the GFC. So after GFC, when it started going ballistic, look at the chart of platinum. It went just one way down, right? It went straight to hell, basically.
Yeah.
So that's basically the bear market started, and we were in a bear market for like a good 6, 7 years. 6 to 7 years. Yeah.
Cool.
So
Yeah, that's really interesting to see that this seasonality for precious metals is there, and it covers all the other precious metals as well, right? Gold, silver, platinum, rhodium.
Oh, I forgot to add the why the price will start going up. Yeah, sorry. So yeah, the refineries, it means they start selling down, close audit, close the books, right? Prices go down. After that, why the price start going up is because when January comes, wholesalers all come back to work, and they were like, okay, great, let's try to stock up our inventory again. They start buying. They start buying platinum. They start buying silver. They're buying gold. However, refineries around the world. You guys don't know this because I used to work in a refinery myself. These guys love a holiday. They really do. So they close their offices all the way to the 2nd to 3rd week of January.
Wow, I like to close.
I wish so.
Take a break
Right?
as well.
Yeah. When I was working for them, I enjoyed that. I enjoyed that as well. So they closed 2 to 3 weeks. And within this period, these wholesalers, retailers, whoever, they want their stock. What happens? They just keep buying up, but no one's selling. All these refineries, they're closed. Right? How are they supposed to supply? Prices start going up until refineries start coming back into action. And it doesn't not like when they come back, they straight away, okay, I can supply all the backlog stuff. No, it takes a while for the refinery to actually boot up. Like computer like that, you need to take some time to actually boot up. And backlog stuff, it takes them a few months to actually get rid of. And that's why after this period, you see price start trading downwards. Yeah. But this year, I think it's a bit more, or next year, it's a bit more dynamic because we have to see the energy crisis that's happening in Europe right now.
Yeah.
You've seen the news like how much prices, like the electricity prices, everything, the energy prices are going up and how high it is. So the refineries have already been warned in a way that you guys are not going to be able to get the energy you require to actually fill up this backlog like you used to. So as I believe that this season we are going to see the same price action, but in terms of how high the rally it might go, I think it's anyone's guess. I don't have a crystal ball after all, but based on the data that I'm trading on, I think it's going to go higher than what I expect.
Right.
What about demand? Do you think there's going to be this demand destruction where inflation, people are not going to buy stuff, and the demand for all these metals are going to go down as well?
Okay, retail side, the demand, right, is basically nothing. If you look at, the retailers are not the one moving the metals for, unfortunately, even in the, that caters more to the platinum side. Silver and gold, of course, the retailers do make a dent, but not that much.
So basically, buy platinum for all your friends for Christmas. Tell them to sell before Valentine's Day, and use it to spend on that day.
Exactly. Yeah, that's a good idea.
Okay.
That's a good idea.
But that, friends, you're all getting platinum. That's it.
Have you checked the price of platinum?
Right now.
Easy. Don't need to stress what to buy for girlfriend, boyfriend, wife, husband. Just buy
Platinum, the gift. And literally,
and if they ask you why, just ask them to watch this video.
and ironically, the article is called Platinum, the yearly gift that keeps giving.
Nice.
It fits the theme.
Perfectly.
Yeah.
Everyone hates buying presents, so this is going to be his birthday present, Christmas present to everybody for every year from now on.
Just buy a platinum bar for someone here if I can afford one.
Sorry,
I buy a gram for them, can you? Enough
Like
already.
grams to
Yeah.
No, but in all seriousness, do you guys also sell the...
Yeah, we do sell the... Okay, in terms of platinum, I'm not sure whether it got so small. I'm not sure if we have it, but I think minimum also there's 1 ounce, so probably. We can try to find smaller than that, but might be a bit tougher because not, like I said, the investment side. Not so many people.
So for this trade, you would buy ETFs, futures?
I'll buy probably futures. Buy futures to get the best bang. Because it's a short term.
Yeah.
Yeah.
Cool.
So
Cool.
all to everyone out there at the moment, I'm short. I'm short. Well, I expect the price. I am a big believer of precious metals, but I play both sides in terms of the futures and the spot market. So I am short at the moment. Yeah,
Until December.
I will look at the price action, but longest I can hold to is mid-December, but I might get out in early December. Yeah, because if there's buying power, we suddenly will see a surge. Yeah, so I don't
It's
know.
something that we're going to look out for as well.
Exactly.
See if we can execute some trades on it.
We are the buying power.
Oh, nice. Please tell me before you do it.
JK, move 0.1%.
We can move that amount.
0.0001%.
So out of the 5 precious metals, what are they all used for?
Okay, so we're talking about gold, silver, platinum, palladium, rhodium.
Yep.
Correct? Gold, everybody knows that. Gold is basically a monetary metal. And mainly, I guess people use it for jewelry. There's a small function that people use it in computers, if I'm not mistaken, the chips and stuff. But I think it's not sizable. Mainly jewelry, and people use it as a safe haven hedge, you want to put it that way. Silver is a mix of both. Some people see it as there are quite a lot of people see it as a monetary metal. The nickname for silver is the poor man's gold. Okay? If people can't afford gold, they go for silver. So silver is seen as monetary metal, but it's also used in the considered an industrial metal because it's used in solar panels. It used quite a substantial amount. It's used mainly in electric vehicles, solar panels, electronics, jewelry. So India, for example, love silver. Yeah, because they generally do like precious metals, but they have imported quite a substantial amount of silver in the last few quarters. It's alarmingly higher. But I guess it's also might be pent-up demand because they were closed for quite some time because of COVID. But they were gangbusters. They went crazy. So, okay, let's move on to platinum, palladium, rhodium.
Yeah.
So the main usage for this tree, it's as a catalytic converter in combustion engines. So basically cars that you see on the road. There are laws and regulations set forth in every country. Basically, you need an amount of platinum, palladium, rhodium in your car before you're allowed to be put on the road because it reduces harmful emissions. Yeah, but there is a new usage for platinum now in hydrogen fuel cells. It's a much greener option compared to combustion engines and electric vehicles.
Definitely.
So the technology is growing. It's not, I would say it's being used in quite a lot of the bigger infrastructure. Korea, for example, they're using it for their boats, their ships. Yeah, it's a very green option to actually operate your boat. And I think that really solves a lot of problem. But and one of the main usages to actually in this technology is you need platinum.
So there will be more demand for platinum as well. Yeah, I think that makes sense. I think Singapore cut some credits for electric vehicles recently, right? Because they were saying that how electric vehicles, the way that the electricity is still generated, is not green. So they remove some of that carbon credit. There's something going on along that line as well.
Exactly. So from day one, when it started, right, we did the research and we felt that generation of the electricity is not green. So a lot of people, I think, kind of fail to see that.
Yeah.
Yeah, but I don't think that electric vehicles are going to take over the world, unfortunately. But I don't think that they will go away.
Yeah.
I think we will live together.
One of the many solutions that people are coming out with. So it's like always an iteration.
Yes.
But I think right now they're saying as well that electric cars has sort of become like a political thing in the US where
Elon Musk. Of course, Elon Musk.
Elon, but I guess the whole green movement is a big thing in the US. So there are some parties who one part. Why do you talk about politics here? But basically,
give it a shot.
Become very politicized. So they're very focused on giving grants to electric car companies. But a lot of people are saying that they should be giving grants in general to help with more research and development versus just one specific industry and one specific solution, because we are not sure and we're not certain that it's the best solution.
Yeah, exactly.
So, are you aware of the BRICS?
Yes. Where's you? Russia. Russia communist.
That's the whole thing.
I felt the pause. I'm like, you want?
So are you aware of the BRICS? And do you think that precious metals will become more valuable with a second reserve currency or worse?
Yes, I'm aware of the BRICS, and I would say it really depends what the reserve currency is being backed by. So there are a lot of white papers, a lot of written and in-depth analysis have pointed towards a basket of commodities, like the new reserve currency. So for the sake of the argument, maybe let's say it's CBDC. Right? They want to claim it as CBDC, but let's say it's just imagine this, a pillar of commodities. Okay. What type of commodities I'm talking about? Like wheat, corn, natural gas, oil, precious metals, anything like that. Commodities in general, hard assets, that resources that you actually can get up. You put it all in this basket of commodities. So the rest of the world, will still trade in their currency. So Sing dollars, USD, everything will be floating around it, around this commodity, this central pillar of commodity. Okay. So what it does is like maybe every political year, maybe 4 years, the countries will have to do a reserve management revaluation. Like example, they have to check what's their reserve in terms of all this basket of commodities. So some countries might be rich on gold, some countries might be rich on corn, based on the country, whatever resources they have. So some countries might be rich on oil, right? Yeah. So using this, they'll be able to swap it out. So that allows them to actually garner back their reserve the reserve that they deem what's that value add, right? And using that, they'll be like, that prevents them firstly from printing money like crazy, and it keeps the politicians in check. And you can't spend like a drunken sailor on a sail leave. So like you have to keep these commodities, it forces them to actually be obedient in a way. So some countries might be rich in like the natural resources. So some country rich in oil, so they can use that as their backing factor. You don't have to have like a 10% of everything. 50% of something, as long as you meet that level. So there are a lot of papers, very complicated. There's a lot of maths to it, right? So some of my researchers, when they dive into it and they understand the math, they said that this is a very elegant solution. This actually fixes the current problem. But getting the world to adopt this, it's going to be a big challenge. Yeah. So, but it is a good solution to for the future, like if we ever actually go there. But something bad has to happen before something drastic happens, right? But I know like there are a lot of precious metal investors in general. They believe that it's going to be a gold-backed currency.
A lot of rumors circulating that's why China and
India is buying, right?
Yeah.
But you have to understand that monetary currency, right? You have to be flexible. You have to allow it to breathe in and out. A fixed gold standard is just too rigid. It doesn't work. It really doesn't work. So right now, our monetary policy, right, is just so complex. It's so intertwined with everything else. I don't think it's ever going to work. A free gold standard, however, like you don't fix the price of gold to a certain level. A free gold standard might work, but again, it can't be just one currency, because if let's say it can't be one commodity. Sorry, but if let's say they backed it by only gold, the China and Russia is going to be the next superpower. Because they've been stocking it over for how many years already? So it's just not going to work. So it has to be resources that is available throughout the world, and it's up to them how they manage their economy from there. So if they overspend on, let's for example, like China, keep buying gold non-stop, even if I'm backed by all these different currency, keep buying gold, thinking that, oh, it's okay I just buy gold, and when the reserve, I need to revalue the reserve currency held, right? I have a lot of gold. What gold drops during that time? What gold falls in price and everything else go up in price? I have to trade my gold for something else. Yeah. So you can't have just one commodity. It has to be a basket of everything. But a good idea would be just everything, that natural resources that you can get from the world.
And it just happens that these few countries are very natural resource rich, which is why they want to do this.
Except for China, right?
Yeah. China is a big...
They're just manufacturing.
Yeah, exactly. Manufacturing powerhouse.
But they're saying that it's good.
They have a lot of rare earths,
So like China and Russia, because one is a manufacturing powerhouse, whereas the other one lacks manufacturing but has a lot of commodities.
Yeah,
so
exactly.
It's like them holding
matchmake in heaven.
Yeah. So how do you think this is going to affect US as the reserve currency? And do you think that US as the reserve currency is going to last?
Okay, let's put it this way. The US dollar is the dirtiest laundry in the laundry basket. So you could put that. So like, as people look at US, look at the economy, inflation going up, and you see dollar going on a rally, right? People are like, why? Why is this happening? Yeah, because the other currency is worse.
Yeah.
US is a basket of currencies. You're comparing the other currency. The other currency is worse. So unfortunately, I think US dollar is going to be the last domino to actually fall. And okay, so for decades of loose fiscal policies, low interest rates and things like that, so people have been borrowing US dollar hand over fist, because like, why? It makes sense, right? Like if let's say I'm in Singapore, like let's assume I'm a millionaire and I want to start my business, I want to property developer, I want to build up something, I need to loan some money. Oh, Sing dollars, how much the interest rate? That time maybe 3-4%, like for example. No way, I go to US, borrow 0.25% or less, or close to zero. Borrow from there, convert to Sing, use it. I use it for that. Then I need to service my loan anyway. The Federal Reserve already said, I'm going to lower the interest rate. I'm just going to pump the equity property market. Right? So just do it. It makes sense to borrow money. So I borrow, build everything. Okay, what happens when dollars start rising? Because I did an FX change from US to Sing, right? When dollars start rising, my debt suddenly becomes big, right? My 1 million doesn't feel like 1 million anymore. It feels like 1.5 million already. So when dollars start rising, my debt suddenly start to the serviceability starts to get a bit worse. So now paired with interest rates rising, my debt suddenly starts to go balloon up, escalate.
Yes.
So what happens, like this is just me. What if there's millions and millions of people like me who did this?
Yeah.
What's the first step you do? Return the debt.
Yeah.
Okay, cut your loss, return the debt, right? When I cut the loss, what happens? I actually sell my Sing dollars, I buy USD.
That pushes it up even
Go
more.
up. Go up. The last so is in this sense, because this is what we call a carry trade. Yeah. So this has happened actually a lot in the past. I think in 1990s, right? There's a yen and US carry trade. So basically same thing. Yen was low. Yen had cheap interest rates. So people are borrowing yen. We were converting it to USD to do their business and stuff. So when that happens, when it imploded, the Japan economy was in shambles, but yen was rallying. Crazy. I feel like, why is this happening? Because of the yen and US dollar carry trade. This time, this carry trade, the US dollar carry trade, is out of proportion. It's nothing we've ever seen. It's nothing we've ever seen. So I will see a short squeeze of sorts. Like it's going to be, US dollar is going to rally. So it will be the final one, but it was going to rally. And when that happens, right, what do? How do you destroy your debt? You destroy the currency. Okay, there is that, because like I mentioned just on the Sing USD, right?
Yeah.
If my 1 million, if a US dollar started going downwards, I'm like, oh, my debt suddenly becomes smaller.
Yeah.
So they are going to destroy the currency. And that, I think the Federal Reserve can do anything. Honestly, they can do anything to destroy the
But won't that also destroy the economy in the US for the people living there?
That's just collateral damage, I'm afraid. Yeah. So, but that would be, I think that would be the black. They will call it black swan, but I think researchers can see it from a mile away. So if that happens, right?
And these are the kinds of crises that you talk about that gold and silver and precious metals in general help hedge against.
Correct. And I know that many people would say that precious metals trade inversely correlated to US dollar. So like people ask me, hey, US dollar you think is going up, wouldn't precious metal go down? This inverse correlation is a short-term thing. Okay, if you look at it from a macro picture, a long term, right, it doesn't correlate. Like it doesn't inversely correlate. There are many situations where they both go up together. There are many situations that will go down together. So I think it's just but to be frank, I think for the last 2 years they've been tight in the hips. Tight in the hips. I don't know why they're so inversely correlated to this extent already. It's too close. But I admit that last 2 years they behave like that. But let's look at the long picture. Don't look at the short term. If you're trading, yes, you look at the short term, but if you're investing in precious metals, look at the long term.
So do you think that when this happens, when we finally get the squeeze and US dollar goes up, and before it finally crashes, when that happens, do you think gold and precious metals will be valued a lot more at that point of time? Or
Yes, I believe so. Firstly, is also you have to look at the people actually will start losing faith in the currency itself. So that could be a real trigger. And that could also trigger the Federal Reserve, their ammunition. Basically what they actually can do to actually calm it down, right? Print more money, lower interest rates. So they only have two arrows in their quiver, right? So quantitative easing or lower their interest rates. Once dollar goes to a certain point, I think they are going to be stepping in, which everyone is anticipating the Fed pivot.
Yeah, I'm also waiting for that.
To be honest, I thought that it was going to happen this quarter, but it looks like they are quite. Seems like it's not going to be.
Yeah.
But US economy on paper seems to be doing quite well right now.
On paper, yeah. Last CPI numbers, inflation did come down a bit, but I don't really like to use CPI as an indicator because they've changed the calculation so many times. I look at PPI, the Producer Price Index. I think that's much more accurate. Yeah, but indeed, I think if I'm not mistaken, PPI came down as well. So it does look like it's cooling, but that might be a reason for a pivot to come.
Yes.
That might be a reason.
That's what I'm hoping for as well.
Yeah.
But on the other hand, GDP data came out positive, just barely.
Yeah.
Which is why I think that the Federal Reserve is still going to keep at it for a short while more.
Yeah.
Because they still have a bit more leeway.
Right.
And I feel that they also want to push interest rates as high as they can so that they have quite more ammunition
Correct.
and slowly lower it back down as well.
That's true. That's true. I think that there's like raising interest rates, there's always this lagging effect, right? They're either over tighten or over ease too much. So like the interest rate stuff, I think there is honestly a cap to where it can go, because right now the bond market is about to implode.
Oh, the bond market's horrible right
Yeah,
now.
it's
The inversion is getting worse and worse every day.
precisely.
Yeah.
And
Yep.
even when the dollar was rising, right? Bank of Japan also had to step in to buy up yen.
Yes,
So like
nobody wants
this is not a good sign, honestly. This shows that the market is in shambles, lah, I'll say, in the moment. So the bond market it's convulsing at the moment. It's pretty bad. The yields did come down a little bit already, so there's a bit more room to play, but it's something has to be done. Something has to be done because I think something's about to implode.
Yeah, the 2-year and 10-year is still very inverted, and it's getting worse and worse over the past few weeks. I think up until like last week, until CPI data came out, like the yield curve was just getting worse and
Yeah.
worse. If I'm not wrong, 3-month also is now inverted with, I think, 5-year or 10-year or something like that as well. So we have multiple yield curve inversions that is going on right now. But we haven't seen like the full economy crash that people keeps talking about.
Yeah.
Do you think that's going to happen in the next few years as well, or next year, next quarter?
The crisis, like the crisis is driven by debt. Okay, as much as they want to paint the boogeyman, they want to say Russia lah. Right? Russia is the cause of it when invading Ukraine. No, this was the debt is basically the driver of this crisis, and it's, let's put it this way, look, the GFC is the appetizer. We are walking into the main meal now.
Oh my goodness.
Yeah, where it is that this is how severe it is. And I think that they can kick the can down the road, but we're hitting a wall pretty soon. So something has to be done because it's really not looking good. I don't know how are they going to grow their debt out of this, like through GDP. Mathematically, it's impossible at this stage. I think the latest one I saw was 31 trillion.
What? Wait.
$31 trillion.
No.
Yeah.
Oh my goodness.
$31 trillion. So it's past any levels we've ever seen.
Yeah, there's no way they can get
You
themselves out of that.
you can't grow your way out of this. It's not possible.
And so if they can't grow themselves out of it, then
it
most
like
likely the
point of
crisis
no
will
return?
happen.
Yeah.
And then precious metals, especially monetary metals,
It's gone.
those will be the ones that actually retain some value.
Correct.
Or in fact, most of the values moving forward.
Correct. So I'm not like,
commodities.
I know most of I might be painting a very doom and gloom picture, but unfortunately that's the world that we're stepping in. Look at where we are. Like inflation is going up. Like property prices at the moment is at extreme levels.
Yeah, I can afford
Yeah,
house.
yeah, exactly. I think there are some bubbles in the world where property prices might be a little bit more protected. So I believe property prices are very overvalued. But Singapore, however, I think there might be a bit more protected, I'll say, because people from my sources, what I hear is people from Hong Kong, they're moving. A lot of expats are moving into Singapore. Businesses are moving Hong Kong, Singapore. Even from China moving to Singapore. So this will push the property prices up and give it some sort of a cushion. But in general, the world, look at the property prices around the world. It's just so overvalued. Equity prices was overvalued. It still is, but no longer at that obscene level. It still is overvalued, but I think there's lots of room to actually go down. So with all this in mind, I think that the next best trade is actually the commodity complex. I'm not trying to be biased to precious metals. I'm saying all commodities, like water, natural gas, oil, precious metals, rare earths, base metals. I think all of them are going to do well.
I think so as well.
Okay.
Because we've never actually bought physical gold before. What's the best way for us to go about it?
Okay, we do have a showroom in 23 Amoy Street. So it's a very beautiful conservation shop house building. So we rented the place out. Can drop by anytime, okay, during we open from Monday to Fridays. So you can drop by and just browse our products over there. And our staff there is very happy to help. If you have any questions or things like that, you'll probably also see me there. So if you pop by, just say hello and say that you saw us through the Weeblings, the podcast. And yeah, if you need more information, like at the end of the day, right, all we want to do is educate right now. So we think that people should be prepared. And I think a lot of people aren't aware, and no fault on their own, because like the news that you guys
Trying to cover it up.
Yeah, news are trying to cover it up, and you are basically exposed to things that they want you to hear. And by the time they want you to, when they want you to when you see the news starting tell you to buy precious metals, it's time to sell. Honestly, it's time to sell. So it's too late by then. So you have to do research on your own, and like just take a step back, look at your everyday lives. Like how I budget my own finance on month-to-month basis, how much we spend and everything, right? For the last 6 months, I have overspent my budget on every single category.
Yes.
Every single category.
This past few months, for some reason,
Exactly.
I can't figure it out because the past few years I've been like
On track and everything, right?
And suddenly this year is just insane. I don't understand.
Yeah, exactly. So this has triggered me to want to educate as many people as I want, because like it's alarming. It's really alarming. If it doesn't alarm
Eating
you,
less food, buying less alcohol, but still.
Still coming home just as drunk, yes.
but yeah, so it is pretty alarming. And so what we want to do is we want to educate the public at the moment, and if we can help as many people as we can. My aim is not to help you make money. If I can, that's a plus. My aim right now is to help you preserve your wealth. Like, don't drop in value. And
What
just
about
give.
for those of us with like lesser capital? So we can't, I guess, we can't buy like a big gold bar.
Okay, then maybe you can start with silver. It's affordable, but if let's say you prefer something where you can do a monthly subscription, the monthly investment, where like if you're buying, last time you were buying in a share stock or something,
Or like ETFs.
ETFs or anything like that, you can actually try Indigo Precious Metals bullion gram savings program. So a rule of thumb, all the different metals, right, all the sizes, the bigger the size, the lower the premium. The smaller the size, higher the premium. This is just how it works.
Yeah.
Bars will be cheaper than coins. Remember this. So the bullion gram savings, the premiums equate to the largest size bars.
We're buying a small amount, but
Yes.
with less premium.
So what they do is they allow you to buy each metal, gold, silver, platinum, palladium, rhodium, in gram sizes. Okay, so you buy it, and the premiums on those are still at the largest possible size of metal.
So to be clear, if someone were to buy a gold coin, they would have to pay more premiums than buying the same amount in the bullion gram savings. Am I right? Because the bullion gram savings cuts down on the premium.
Exactly. So like it allows you to just save up. So if you want to do a $50 weekly or even $50 monthly, let's say if you can't afford it, you can also get exposure to this. And right now, my take is you get the two metals that you should really look at. Of course,
Platinum and silver.
Yes. So of course, your viewers, you should do your own research as well. But silver and platinum is my go-to at the moment. I still put aside on gold. So truth be told, my portfolio, 20% gold, 40% silver, 40% platinum. That's my allocation.
Right.
Okay. Thank you so
you
much
very
for
much.
your time, Justin.
No problem. Happy to be here.
Learned so much
Yes.
today.